talk about this idea of adequate disclosure in accounting. The concept of adequate disclosure is a fundamental accounting principle and ensures that financial statements provide all necessary information for users to properly interpret them. So what we are saying when we refer to adequate disclosure is that when a user of the financial statements comes and looks at, say, Nike's financial statements, in addition to the user being able to see all of the statements themselves, so if we scroll through, here is Nike's statement of income, here is their statement of comprehensive income, their balance sheet. Notice that these numbers are in millions and that they have $7,464,000,000 of cash and cash equivalents as of May 31st, 2025. Now suppose we wanted to know more about one of these numbers, for instance, property, plant, and equipment, which is appearing here as an asset in the balance sheet. What if we wanted to know more about that? Well, the concept of adequate disclosure says that you should be able to go to Nike's footnotes, which follow the financial statements, and look at more information about property, plant, and equipment. You'll notice that note 2 here deals with property, plant, and equipment. And if we wanted to know more about that number that's in the financial statements, you could see the breakdown, and it looks like of the $4,828,000,000 of property, plant, and equipment, we have the largest portion is $3,510,000,000 of buildings. So that is the largest portion of property, plant, and equipment. The idea of adequate disclosure, again, is to give the user of the financial statements as much information as possible so that they can make good decisions. Thank you for watching. Take care.